Recording in progress.
Hey guys, good evening.
Good evening, Leo, sir.
Yes, how are you guys? Um,
Good.
okay, very good. So Francis, Ashwini, and Jadeep, many more. I couldn't see those names down. I don't know why. Okay, so yeah, Francis and Harsh, Maya, Jonathan, Omalta, Ashwin, Jadeep. Okay, guys, so we can start. I think it is all about multifamily investment with zero down strategies. And particularly we talk about vendor take back VTB. Um, so we can take 2 minutes, and right after that we can start uh, dive into that. So anybody here new who would like to introduce yourself?
I'm Francis Hastic.
Yes,
And
Francis, how are you? Is it the first time?
yeah, this is my first time.
Okay,
And and I would like to learn how to buy real estate with with other people's money, basically.
okay. That means zero down strategy means it is not just zero down. Somebody has to put the money. That's the real logic most of the time.
Yeah, definitely.
Correct. So what sort of experience you have already in real estate?
Well, the only experience I have is buying a single family house, like townhouses.
Okay,
So I bought two, no, one like that. The first one I bought was like that. Like I got 75% from the bank and 25% from a money lender. So
okay.
that was the strategy there. Yeah.
How long before that?
Well, I'm looking about 10 years ago.
All right. So still
Yeah.
you own the property or you sold it?
I sold it, and
Okay, do you
after
have
that,
any?
huh?
Go ahead.
Yeah, and after that, I bought another townhouse. But then
Okay.
I used my own money, like I put down the like it was 5% down type of thing.
Okay.
So I did that. But since then, I haven't been in the market.
Okay.
So I'm interested in multifamily houses to
Okay.
generate an income really.
Right. So you're from Ottawa area or Toronto area?
Um, well, I've been in both places. I lived in
Okay.
Ottawa for about 30 years, and now I'm back in Montreal, and I've been here for about 3 years now.
Okay, that's good.
Yeah.
Right. Okay. So you plan to buy property, multifamily. Why you switched to multifamily? Any particular reason?
Well, I'm looking to generate an income, and I want the property to pay most of the mortgage, basically.
Mhm.
So that's my main reason. If I bought like a townhouse or a family house, then I'm responsible for the mortgage, all of it. But if you buy a multifamily house, then
Yes.
the tenant would pay, I guess maybe pay most of it.
Correct. Yes. Of course, that's the reason even I also moved into multifamily from single family. Okay, thank you. Anybody else, Ashwini, or anybody like to introduce yourself? Maya, Harsh, Jonathan? Anybody?
Oh, okay, I'm Ashwini Sharma.
Yes, go ahead. This is the first time you are here?
Yeah, first time.
Okay, so introduce yourself. You have any experience in real estate multifamily?
No, I don't have any experience. That's
But
why
did
I
you,
joined this
did you
webinar.
buy any single family
I have my single family home,
as a rental property, or you live on that?
only only living
Oh,
and basement rented.
or basement rental out. Where are you living from? Yeah,
Mississauga area.
okay. Okay, anybody else interested, you can go ahead or you can interrupt me in any time. And Maya, where are you from, Maya? Okay, maybe they are moving or driving, I don't know. Okay, we can start. And okay, guys, so this is all about buying multifamily property within about 180 days with zero down strategies. That is the main purpose of this. And of course, it should go about 60 to 90 minutes maximum. My name is Leo Ganesh. I'm the founder of Canada Investors Club. I'm a real estate investor and coach. And of course, I am a mortgage broker as well. Originally, I'm an accountant by profession. I had my real estate license too, but I just stopped that. because I can do everything. So now I'm mostly into coaching and real estate investment, especially multifamily. So this webinar is all about buying multifamily with zero down strategies within 680 days. So at the end of the webinar, of course, you'll have a reasonable good idea about idea and confidence and a plan to buy a multifamily property. And of course, you may need some support sometimes, but definitely you can start somewhere. Of course, those who stay with the end of the webinar, of course, I'll promise you may be able to have a chance to work with me or invest with me or learn from me in any other investments. So multifamily, some people may not know what multifamily is. Multifamily means a dwelling unit which has more than one unit. The first one has 2 doors. You can see it is duplex, other one triplex, third one is 4plex, the other one is 8plex. The last one here is a mixed commercial residential unit, 8 units on top and 2 commercial units in the bottom. So this is called mixed commercial. So you can decide what sort of property doesn't matter to buy, because some difference there within 5 properties and more and less than 4 properties, 4 units, because the mortgage qualification and things like that are different. But other than that, multifamily is multifamily. If you are very serious, you can put your goal, and it can be any big goal, doesn't matter, as long as you really target that, and as long as you reverse calculate and put the plan and milestones, you can definitely achieve that. But that achieving a goal is not really determined by your knowledge, experience, or anything else, or even the down payment of the money what you have. It is totally about the commitment and the goal that you create, and how seriously you want to follow that with the right people. Because if you don't know what it is exactly, you should find out somebody. Other than that, your own knowledge is not really material. Many people don't really have much knowledge, but they're able to work with other right people, and they are doing that. 2 days back, I had a small interview with another fellow investors. They recently started, but about 3-4 years back, but they bought many properties, but they didn't even visit the property for the last 1 year. So that is how the real estate is working when it comes to multifamily. Single family, you will take your husband, wife, and children and everybody, whether you are going to live or even for you to rent that, because that's the first move you are taking. It is totally emotional. And of course, you will try to get many people and get some ideas, things like that. But 90% of the people will come with no knowledge about it, and they may ruin your idea and things like that. You may have given up even buying a property. But when you go into multifamily and commercial properties, you will not simply go and ask your friend or somebody, because they would never have bought a property like this. So you have to really go to your accountant if he's experienced, or lawyer, or whoever who really bought this type of properties as a coach or mentor or friend or business partner. Then only you will get the right idea. So you see that, as I told, that person did not visit the properties for the last almost 1 year. How did they buy? Of course, the power team. How did they manage with the power team? How did they get that property or everything, renovation, things like that? Yes, all about that. So that is what we had to learn. Single family and multifamily, it has a big difference, just like that. So for the time being, if anybody is serious, you can just book a number or identify what sort of property you want to buy. Multifamily means a triplex or duplex or 4plex or 8plex or even more than that. It doesn't matter. Then you have to put that goal. Then you have to reverse calculate how you are going to do that. You may put some ideas. Again, you put who can help me in achieving that. So at that time only, you have to find the right person who did that with you. So that is the way that people do that, and that's the right way to do that. And one more thing I can tell you, many people have a big idea, multifamily or bigger properties mean we have to really have a lot of down payment. Of course, if you have a lot of down payment, it is really good, but how long are you going to wait and save that much of money? Probably it's not easy. So what is the next best step? Of course, you have to just start even without money, and you have to figure out how you have to do it. Again, you have to ask your right person or work with the partners. You can definitely do that. And 90% of the businesses and multifamily purchases are happening that way. They don't use their money. Even if they have their money, they don't use that. They just get other people's money and plan that and properly manage that. So that is a real business. Otherwise, halfway through, after first property, second property, or third property, you have to stop buying properties because you will run out of money. So as an investor, you may keep on buying properties. So you cannot just rely on your money. So you have to learn that skill, raising capital. That is a very important skill that you have to develop. But any business skill is learnable, as you know. So likewise, raising capital is another one you can simply learn. managing properties, managing people is another skill, business skill. Definitely you can learn. So nothing is going to stop you other than yourself. It is 100% true. Because I'm talking only from my personal experience, because within 6 months, I landed in this country about 20 plus years back. I was able to buy my first property, and of course, no money down. And second property within 2 years time. And of course, third year or what, I lost my job, and then stories turned back, and I can talk about that later. So it is definitely possible. As I told, my name is Ganesha, and I'm a real estate investor and coach. Last year, 2021 and 2022, I bought about 10 multifamily properties worth about $9.7 million. And of course, it gave about $3.2 million capital gains as a profit. And of course, I made all that happen with VTB, second mortgage and third mortgages. I did not have any of my own money. So that's how I bought that. So that's what I'm teaching mostly to my students. But of course, there are so much of qualifications, and they have to really see and do it in the right way that we teach all the time. So as I told, these are the 10 properties that I bought in one single year. So my disclosure, of course, as I told previously, the unrealized capital gains means, of course, most smart investors don't sell their properties because they try to use the proper corporate structure and family trust, things like that, so that they are able to secure their wealth for generational chain. So that's what they are doing, unless they have a particular reason they don't like to sell real estate, especially. And of course, as I told, in my portfolio, I have first mortgage, second mortgage, VTB, third mortgage, everything, but zero investor capitals during that 21, 22 years time. Even before, of course, I brought many investors' capital as a shareholders' capital. Even after that, I do that. During that period, I really wanted to do a challenge that buying 10 multifamily properties with zero down and as a debt capital. That's my declaration and challenge. I want to do it. I did that. So during that time, of course, I did have zero investors' capital. So the 100% profit belonged to me.
Leo,
Yes.
with the prices of houses today, is it a good time to buy?
What do you really think?
Well, I mean, I look at in Montreal here, I look at prices, and I mean, it's 3 or 4 times higher than before the COVID. You know, I mean, if you go buy a house, the tenant not going to say you buy a duplex or a triplex. Rent you receive not going to cover the mortgage. So I'm wondering that, you know, like, you know, with the cost of house keep going up, you know, are you going to end up in the positive? Say you buy a like a duplex or a triplex at this time?
Very good question and very good analogy. But at the same time, before COVID, you say the price was 2 times or whatever. Now it is too high. I accept that. But what about other expenditures, material cost, or even transportation fees, charges, shipment and clearing charges? What is not doubled up so far? Almost every expenditure.
But I don't think okay, like people wages are not growing as fast as the cost of living or the cost of houses. You know,
I know. It is
like
so unfortunate.
I
It is so unfortunate when we take that topic. It's really unfair too, because majority of the population in Canada or most of the countries are living on their own house or rental houses. Reasonably rental houses. Okay, we assume 50-50. Even India or Sri Lanka or wherever, even there is even more, because that countries are for the last 5,000 plus years. So there is a total different sector for landlord and other people, renters. So the landlords really let them rent and things like that. The renters never even think about buying a house because it is not reachable, even in back home, Sri Lanka, India, wherever. So only few people try to buy houses. Buying houses is the most expensive and the highest level decision in any part of the world. But of course, in Canada and US, it is made a little easy. It doesn't mean that it is just easy. So unfortunately, housing is for everybody, but at the same time, owning a house is not really for everybody yet. So it is the most expensive. Second, of course, if you go to Montreal, Ottawa, or even Canada, to Ottawa, Toronto, that is the almost #1 cities in the world, or whatever we can say. So if we try to own a piece of land or property in this type of places, unfortunately, we have to deserve it or work hard for that. Not for everybody. But if you turn it the other way, price has gone high from COVID, before COVID, and now it is true. Not only this house price, every price. So house price is also part of that. So are you really expecting the price of houses or anything is going to come down drastically in next 1 or 2 years time?
Well, with the cost of, they keep raising the interest rate, and I mean, some people are going to lose their house because of the increasing interest rate. So
True.
I don't know, because when they had the housing crash in 2008, the price did drop.
True.
So I mean, not by much, but it did drop.
Yeah. In 2008, it was a recession. So the government reduced the interest rate and kept it lower. So that is how they try to manage that property crisis. And of course, they were able to manage it up to 2018, more than 10 plus years. But this year, this crisis last year and this year, it is not only a real estate or recession, it is more than that, inflation as well. Inflation was not that high the last time. This time, so much of money in the market, so inflation also shoot up big time. So that inflation, whenever inflation goes high, government try to increase the interest rate and control the inflation. And the second, of course, once that inflation is under control, still the recession is going to continue, in my opinion. If so, they have to reduce the interest rate. So inflation is fairly controllable because their expectation is to control the end of this year or whatever. If they do that, if they did it already, but it is not 100% true or correct, but they did to a great extent. So that's the reason that the inflation rate come down by when you increase the rate now. So by next year in this time, even if you Google and see, you will see expected interest rate maybe about 3.5 to 4 or less. If that is the case, again, the property price is going to go high.
Oh, okay.
Because one simple analogy, March to June, everybody thought the interest rate is not going to go high hereafter. Everybody thought that way. Even government also said like that, indirectly or directly. So people got some confidence and they started buying properties. So multiple of us started. That's a foolish bad thing. But at the same time, high price property has already gone up a little higher. Suddenly, again, June, they increased the rate. So people panic. So they did not come out of that again, because again, July also they increased, expecting in next month too, maybe. So that panic is the one stopping buying properties. It is not the interest rate alone. If it is interest rate alone, why in June, July month or May, June month, the price has gone up and multiple of us started? People are not really fearful, maybe foolish, but people are not very fearful about the interest rate, but that uncertainty is a big time because they don't know how far it's going to go, whether it is going to come down. So if it is going to come down, people don't want to buy at a higher rate, so they want to wait. If it is the same 6 or 7%, again, there are going to people buy because rather than renting, they still are convinced to buy. So that's not going to be changed. Last year, about 1 million people came to this country. So they all are renting. So they all have to go into housing gradually. So when you compare to USA, in USA also I heard about 1 million people came into this country last year. That is 10 times bigger country. Here it is just 1/10, still 1 million people. So how are you going to expect the price going to be reduced forever in a democratic country and capitalized country where the demand and price is controlled by the market? So it has been, we have been watching this type of hike and going down trend on and off, but that is, in my opinion, temporary. I don't want to take it as a consultant or economist, but for the last 40, 50, 60 years, trend is that.
Oh.
So we never see this is the highest price for a property. Nobody can put a seal on that, right? So it's going to continue, in my opinion. Sometimes it comes down and go, but not everybody will be offered to buy property. That is a real truth and reality. If politicians want to tell about the other way, it's okay, let them tell. But as a business owner, you know that.
Yeah, I suppose supply and demand, goes back to that.
Yeah, that's the ultimate thing, because everybody coming to the country, if we can say about the recent immigrants who are coming with IT background, things like that, they come as a single and they get married and their family income is about $250,000 within 1 or 2 years time. So are they not going to buy a property?
Yeah.
So they are going to continue. So I don't expect that going to be a worst case scenario, but at the same time, that's the reason I put a disclaimer here. I'm not a lawyer, I'm not an accountant or tax advisor. So you have to get the right advice from the specific matters on the right advices. I'm only sharing my opinion experience.
Oh, okay.
Thank you. So in my opinion, multifamily is the safest asset class in real estate because it is recession proof. It has many tax benefit compared to single family and other asset classes, and it gives biggest profit as well. And of course, the last thing is unlimited growth potential. The reason I moved into from single family to the multifamily is that because I bought about 14 or 15 properties, single family. And of course, after that, I couldn't buy any more because bank will put a seal on buying the total number of properties that we can buy. So I decided to sell them and try to move into multifamily. And of course, it is definitely better than single family. Probably everybody will agree. Otherwise, you wouldn't have been coming to this meeting. So if anybody is really decided that you want to make your wealth or money or what through multifamily, you can put number 1 in the chat box. And of course, as I said, this meeting is going to take about 60 to 90 minutes maximum. And okay, so I'm just here going to talk about the myth or the misbelief that many people think regarding multifamily and real estate investment. One of my friends, he didn't buy a property, a single property for the last 19 years or 20 years. He's an accountant working for CRA. Everything is good. Money is not a problem, but still he's thinking this is overpriced. He has been thinking that for the last 19 plus years. In 2006, I bought my first property. 2005, I bought my first property for $145,000. I think it's a condominium. And the same property is about $750,000 now. So on what basis he's still thinking high price, low price? I don't know. We had to just jump on the bus, and then we had to see how we had to make use of it. Okay, so these are the misbeliefs. First one is buying a multifamily will take a lot of time. Second one, managing a multifamily and increasing the market value is difficult. Third misbelief is, of course, many people think it needs big down payment and extra. And of course, these are the difficulties, definitely. But of course, just because it is difficult, not everybody is doing. Just because not everybody is doing, that is why it is still a beneficial or right valuable opportunities that you can grab. And probably you may have somebody maybe already in multifamily investment. If so, please raise your hand so that we can have a look. And at the same time, you can even put anything in the chat. If you already bought a property, or if you have already at least started looking for multifamily. Anybody? Okay, guys, so we can go into this little deep on this misbeliefs or opinion, but I also accept it is one way it's correct. That means it'll take a lot of time to buy properties, because even though I'm a mortgage broker and even though I'm an accountant, I bought about 14 plus properties. Still, it took about 3 years for me to switch into multifamily and bought this first property. So it takes time because it has lots of things to learn. And of course, sometimes people are fearful and don't take enough action to learn everything and take the right step. So take time. One way it is correct. Second one, of course, managing and increase the market value is difficult. And many people say most of the properties are 100% tenanted. The existing seller 100% tenant the property and increase the value, then only he sells. Again, Ontario is a tenant-friendly province, so they can increase the rent too much and they can evict the tenant too easily. And of course, most of the properties are negative cash flow and no additional income. So those are the reasons people are thinking increasing the market values and managing the property is difficult. And the third misbelief of thinking is, of course, buying multifamily needs a lot of money. And of course, generally, a commercial property or multifamily property needs about 25% down. And bank mortgage is fairly difficult and different. And of course, they don't have much money. And of course, they think they cannot save that much of money in a shorter period of time. And many people don't believe the debts because debt means it's bad. That's many people's opinion, because that does come from their parents and grandparents and things like that. But of course, there are good debts and bad debt. They should be able to identify the difference, and then they should be able to use that. In this recession market or in this inflationary market, If you don't make use of the debt, you can't even maintain the purchase power of your wealth or the money, whatever you keep in your bank. So debt is the only way that you can even leverage and safeguard your down payment or the money in your bank. $100,000, if you simply keep it in $100,000 in the bank, you are going to have about $80,000 or $90,000 value next year. How can you increase that? At least take 50,000 and give it about 9% or 10% interest investments or something. So that 10% will help you to at least preserve the purchasing power. If you don't use that debts, of course you cannot. Otherwise, you have to go and invest. So those are the only two ways that you can mitigate the chance of losing money indirectly. But many people think it needs a lot of money. They don't want to buy that. And debt and credit, debt is not a good thing for them, and it is expensive. So if it is expensive, they don't want to buy. Why they are thinking that way, I don't know. Of course, it is strategically, they have to calculate everything and take a right, sensible decision with consulting with their accountant or whoever. But they cannot blindly think that is bad. But of course, sometimes the husband and wife or spouse may tell that way, or the parents may tell that way. One way it is good. If it is a calculated risk or debt, hopefully it is good. Otherwise, they cannot make money. And if the debt is not in this play in real estate, probably nobody will buy a property. If you buy a property for $1 million by paying cash $1 million, and in next year, how much it's going to increase? 5% or 10%? If it is 10%, $100,000, 5%, it is $50,000. If you assume conservatively 5%, $50,000. By putting $1 million money, if you get $50,000 in 1 year's time, maybe that is taxable, non-taxable, totally different story. Are you happy with that? Probably I'm not at all. So if you really want to be happy with the money, how you make it, then you have to play with some leverage. So instead of putting 1 million, if you can put $250,000, and if the same appreciation, $50,000 happens, maybe okay. $250,000 gave you about $50,000 appreciation. So that is about 20% return for your investment. That may be acceptable. 5% return on $1 million is not an acceptable investment. If that is a scenario, nobody will invest in real estate. So the beauty of real estate is leverage. Leverage means putting little down payment and buying a full property and get the appreciation on the whole property. So that is the beauty of that. So they have to really understand that. Many people thinking the other way and don't do that. So if this is the case, then how can you get into this multifamily within 3 to 6 months time? Because my promise is that, and my target is that, and even probably you may be thinking, yes, I have to buy 1 or 2 properties at least 1 year's time minimum. What is the main reason for that? Even though interest rate is high, everybody knows that. Even many people are panicking. Even then, you all are coming to this meeting like this one to buy or find how you can buy a property. So what's the reason? Because as the previous person, Ashwini said, prices compared to last year, it is high. But why are you comparing with the past? You have to compare with the next year, what's going to happen, or the next year after that, what's going to happen. Do you have any doubt that in 2 years' time or 3 years' time, the real estate price is going to come down in Canada? If you think that way, yes, you can wait for a while. If that is not, then why are you thinking backward? What's the point of talking about a postmortem or the past history? That is just past. If you really want to make wealth, you have to go and think about the next year. I've seen many savvy investors, they simply compare, yes, next year it's going to be this, or worst case scenario in 2 to 3 years time, it's going to happen this way. So how I can justify now my investment? One single example, as a mortgage broker, recently I closed a deal about 4 months maybe. He came from USA and bought a property here, but he bought it for $1.4 million. And he told me the same property would have gone for about $1.8 million last year. So he bought it at $400,000 cheap. And of course, he's paying about $1,000 or $1,500 more each month. But I did the mortgage for him. So even for 1 year, $18,000, even 2 years, $36,000 more. So do you have a very big question that even after 2 years, the real estate is going to be like this? We don't think that way. Anything can happen, but 90% of the people and 90% of the statistics don't show that way. So $40,000 or $36,000 he's paying more, as long as he's okay with cash flow, and he's saving $400,000 and already he started living in that house. And the future appreciation is for him. And again, if that go back to the normal market, automatically it get go to $1.8 million. So $400,000 an immediate appreciation he saves for soon. But again, the year-over-year appreciation is a future. So who will not buy that? Because his father is a realtor and he is a qualified investor because he used to work for Apple Computers and things like that. So they took a sensible decision. So that's the reason I say if you want to buy a property, it's the best time, because now the competition is less. Many people take emotional decision and they don't buy properties. They are at the sideway. And next year, if everybody starts buying, interest is going up, prices are going up, they will go behind and buy in multiple offers and everything. They themselves will know the last year, the same property was about $500,000. Now it is $650,000 and they will still buy. And they will not, sorry?
Leo, when you buy property, how much cash flow do you expect from the property?
It is, first of all, how much you are going to put. That is a bigger question, because if you treat this as a business, ROI based or all based on your investment, what you are putting or the effort you are putting.
But
If you don't put it,
some investor set a target for the cash flow, how much cash flow, or else they wouldn't touch the property. So do you set a limit on how much cash flow you expect from the property?
yeah, because in a real estate investment, cash flow is not the only profit. There are minimum 3 elements. Even last multifamily boot camp, the 3-day boot camp, I took an example from a downtown property, a multifamily property. The price is very high, but at the same time, the cash flow is pretty negative. Even then, when we analyze the property, the negative cash flow plus the expected minimum year-over-year appreciation, third one, the mortgage payoff. When we took all three, it comes about 20% ROI.
Okay.
If you get 20% ROI for your investment, are you okay with that?
Yeah. Well, it's better, better than what the bank would give you.
Sorry?
It's better than what the bank would give you.
No, bank would give what?
Nothing.
The mortgage?
You put your money in the bank and the bank doesn't pay you nothing. So if you get 20%, I mean, you're laughing.
Bank did not rob your money from you, right? You want to go. Right?
Yeah, they take your money and they want to charge you to keep your money.
So everybody exactly know that. And
Yeah.
we still do that. We think my bank is the safest place. That is a really unsafest place.
Yeah.
And I'm telling you one, because whatever available for the common public is not the right thing. It can be RRSP, RESP, or even GIC, or whatever the government gives or anybody gives or whatever is consumed by the common public, 90% of the population or 80% of the population, how could that be the best?
Yeah.
Then how the other balance 10% people can make money or whatever out of that? So if you are foolishly putting money in the bank for the convenience you are putting, okay. But if you treat that as an investment and putting, I don't know. I have a little money in the bank and they'll send me a renewal document about 1 month before, or what, at GIC or RBC, 1.25 interest rate.
Yeah.
The same bank 1 week before sent that mortgage renewal document at 7% for my commercial mortgage.
Yeah.
So when they give their money 7%, when they give our money, of course, they will give 1.25. Then I talk to them, they put it to 3% or 3.5%.
Yeah,
So this is the situation. So mistake is mine or banks.
Yeah.
There are so many ways of doing protecting your money. If you are not knowledgeable, you have to go and ask somebody who can really do that. Some experienced uncle or accountant or somebody is there. But you go to a bank, and do you think really they know exactly how to do that? Do they really give you a sensible advice on that?
Yeah, not really. No.
If I tell you don't invest in Royal Bank in this investment, they will, if you tell this, then they will say, yeah, that is good. If you tell the other one, they will say that is good. That's all they are doing. So I can't blame them. We have to blame ourselves. So the reason I want you guys or anybody to buy a property now, because the market price is cheaper. Even though multifamily pricing is totally different, calculated based on formulas, things like that. But at last buyers has to come and buy, right? So in
Yeah.
that place, in the marketplace, more than the sensible, knowledgeable buyers, there are enough emotional buyers, even in multifamily. So they are working with their emotions. So they are fearful, they backed up. So even the right buyers have more opportunity to bargain and buy, but that they have to have some knowledge. If they have the bargaining, negotiation knowledge and underwriting knowledge and everything else, they will still buy. If a negative cash flow property in downtown is making a sensible, is coming as a sensible investment with 20% ROI, what else will not? Only thing you have to make sure that cash flow or the monthly mortgage, you should be able to service that. So for
Yeah.
that, there can be so many strategies we can use. So we analyze that in the boot camp or even one-on-one and masterminds. We do that because commercial properties, we try to make a bad deal into a good deal. That is our experience and knowledge. Provided that good deal is going to really give you a good yield after 1 or 2 or 3 years time. If you can feel that, you have to make sure that. And you cannot do that in the, again, bidding situation after everybody starts buying. So now is the time. Now maybe you can increase your knowledge and very soon you can buy a property. So if you wait forever, you are going to pass this recession or whatever we call. $400,000 in one single property, about $2 million property or $1.8 million properties, you are able to get the savings. So why we are waiting for? And second, of course, the starting is different, buying is different. Starting a journey starts with the learning, and buying a property is halfway or after some time. So if you start learning now, then you will be able to dissect and see what property is good or bad, then you will buy the right one. If you don't start to learn now, of course, by the time good time is there, you will be start learning and continue learning. You cannot buy at that time. Yeah, so before the recession goes off, I would say we better buy properties and we have to use many strategies. I know for sure cash flow is the biggest problem. We have to find out, figure it out how we can do that. Probably we cannot do it alone. We may have to have a mastermind and training and group and people. Otherwise, we can work together, things like that. So much can happen. But at least you should be able to buy first property. Then you will learn a lot. And then the next day, you will find out what else can you do. Okay, so the next one is, so what is the solution? As I told already, we have to have the unique proprietary process in buying properties, and we have to have the continuous support and expert advice and continuous learning. And of course, if you really want to go big, then you have to make that as a self-managing business. If you want to do only 1 or 2 properties, perfectly okay. The 5th one is not at all applicable and not at all required. But the continuous learning is important if you really want to buy a property later on too. And of course, expert advice and continuous support is very important because in multifamily, we cannot learn everything by ourselves. So much of chances that we make mistakes. But this is the place where we can make money too. So we have to learn that. It is not rocket science. So if you can solve all these, will you be able to buy a property now or soon? That is a question that is based on your personality and risk-taking mindset and learning mindset. Many people will keep learning for many years. They will not buy the first property. That is their mindset. So as I told, those 3 misbeliefs, why are they wrong in my opinion? Because it will not take a lot of time to buy a multifamily property, because from my experience, I can say I bought about 10 multifamily properties in 1 year. So definitely you can buy 1 property. The people don't understand something will take more time, whether it is math or whatever or anything. If they know how to do it, they can move faster. So here the knowledge is the one really stopping you, not the money or anything else. So taking more time to buy the right property because of lack of knowledge. One of my students, who is a full-time 1 year paid coaching student, and he's my mentoring session, and he's a realtor too. But even then, one day, even after enrolled and started working with me, he told me, came to my office and met me on a one-on-one course and told I couldn't find good multifamily properties. Within 2 days, I found a very good property with 34 units or what, and I called him to come and meet me so that we can go through the deal. But he came only after 2 weeks. By the time he came, the property is sold. But when I gave that information, within a day or what, he talked to somebody who did not have enough knowledge. They simply said, oh, that area is this area is that, or something like that, demotivated. So he came after 2 weeks' time. Property is gone. If it is a bad property, it should have been still there. Why it is sold? He didn't really calculate that. He didn't understand that because his knowledge is lacking, not enough, but he missed it. But when I showed the calculation, it's about minimum $1 million opportunity he lost. Within about 6 months' time, he could have made that much money. So what is stopping you is not the time or what, it is really our knowledge. If we have the knowledge, we can take quick action, and even we will withdraw from bad properties too. Of course, as you know, even many people are still putting offers. Don't you see any people that they are putting offers now in multifamily and commercial? Anybody knows anybody buying properties now? Yes. Even yesterday, I talked to one of my friends. They told that they are buying about a property about 296 units. Closing is going to be 31st or something this week. So are they not buying in the right way? Are they not buying as a good deal? Are they not fearful? Everybody is fearful in this market. Even then they take action. So if they say they are not fearful, they are fools. So everybody is fearful. Even with that, they try to take the right steps because right advice and right people behind them. So they are taking the right decision. So everybody is putting still offers, but in the right way. Okay, second one is managing and increasing the market value is difficult. People say, I say it is easy because we have to have the right property, we have to buy the right properties, and we have to have the right strategies, and we have to work with the right people. Increasing the profit or increasing the market value is all about the strategy. Last time I did one example in one of my events. On the face of it, it's a bad property. So many people said, yes, it's bad, we cannot buy that. Then when we do that calculation and with the right options and things like that, everybody said, wow, it's an amazing opportunity. So you guys have to become a deal maker in this time. You cannot just find a deal by yourself, because we have to creatively find a deal or make it as a deal. That's your negotiation skill and creativity skill and the knowledge in this. So that's how we are doing. But if you are waiting, of course, property price is not going to come down. So if you cannot buy now, next year, how are you going to buy? Only thing, the interest rate going to come down. That's it. Other than the price is going to be higher. And are you really buying a property only for cash flow? What is the main reason people buy multifamily or commercial properties?
Oh, it's not for cash flow?
Anybody else?
Appreciation, capital appreciation.
Yeah, capital appreciation is the #1 goal for everybody. If it is cash flow, then you define how much of cash flow you are expecting from one door. If you buy a 10-plex unit, from each unit, how much of cash flow you can get each month?
Yeah.
$100, $200, or even $300. $300 into 10 is $3,000 per month in a 10-plex unit, and 10-plex may be about $1.5 million minimum. So when you put 1.5 million, about 20% down, you are putting about $300,000. When you put $300,000 and if you get $3,000, $36,000, are you happy? We are not buying a property only for cash flow. Cash flow is just to protect your keeping power. That means you should be able to sustain with the property. So that is the reason we look at the cash flow. Other than the real profit is the capital appreciation. So the capital appreciation, yes.
Leo, isn't like when you go into commercial property, isn't the cash flow usually determines the price of the property?
It is not the cash flow, net operating income. Of course, indirectly cash flow includes in that, yes.
Yeah, because that's what I talking. Okay.
Yeah, but when you go in detail, you know that cash flow, we don't really worry much cash flow, that's cap rate, because the cash flow totally depends on how people are funding that property.
Yeah.
If you put 50% in cash flow, if you put 40%, it may not cash flow. Things like that, it may vary.
Yeah.
So the ultimate profit is different from cash flow. So ultimate profit is mostly the capital appreciation.
Yeah, because I mean, I read somewhere that the value when you go to buy a property based on the cash flow, that determines the price of the property. Because I mean, if you're in business, you don't want to lose money, so you got to make sure that the cash flow going to cover certain costs, you know.
Yes, but did you ever follow any real estate courses in commercial properties so that you know how the calculations works?
I've read a few I've watched some videos and I read a few booklets on it.
Yeah,
And,
yeah.
I mean, they say the most important thing is you have to make sure, like I said, some people say it's okay, they want to have at least 10% or 7% or 20% cash flow for them to consider the property, because it has to cover, you know, certain costs. And as you get older too, they don't base, they don't base it on, say you're not working, they're not going to base the mortgage on you. They base it on, okay, how much cash flow is the building, what's the value of the property by the cash flow. So I don't know if that's true or not.
Yeah, it is not fully true, but at the same time, when you take care of the cash flow, indirectly, you can take care of the rest of the things maybe.
Yeah.
Because if you have the cash flow, you can pay the mortgage. If you
Yeah.
can pay the mortgage, at least you can keep the property. If you can keep the property, sometimes automatically that appreciation may happen. But if
Yeah.
you find a property where the appreciation is not possible, then of course, even though the cash flow is coming, that's only profit. So
Yeah.
we look at so many things, and we just even one time, one paid student, full-time student, he's a very smart guy in Vancouver. He is already an investor in IT and everything, but started real estate recently with me. And he bought a 5-plex property with VTB, no down payment required, everything. It's a cash flowing property. Even then, when we go through that, and he decided, yeah, it is not the best property as per my review, and then he stopped buying that, and he's still looking for other good properties.
Mhm.
So cash flow alone will not determine everything, but that's a very good measure too, no doubt about it.
Yeah, like for me, to buy a property, I would have to, I would need a positive cash flow, else I wouldn't buy the property personally.
Yeah, that you can see. But sometimes you have to make it happen, right? If everything is in the silver platter, then why are you an investor? Anybody can buy the property and go, just
Yeah.
like in the
But,
residential properties.
I mean, in the example you're giving there, like, I mean, people usually, I mean, there's people goes around, they buy property and then they improve it so they could raise the rent. So, I mean, it all goes back to the idea there, right? Because, like I said, you start off with $100 a month, and then okay, when you do the improvement and you increase the you're able to increase the rent based on the improvement you do.
Yeah, so that's all we underwriting. We see that underwriting, how it's going to go first year, second year, third year. Then we will determine how we are going to buy the property, and many things we do that. We categorize this underwriting into just a normal underwriting and advanced underwriting, so that we can go deeper into that. That determines whether we are going to buy the property or not. Yeah, definitely that's good. So here, managing properties or managing and increasing the market value is easy, but as you tell, here we can put the one example. If you make about $200,000 investment and make about $100,000 profit, the ROI is 50. But if you put about only $100,000 investment, and if you can make the same profit 100,000, the ROI is 100%. So that 100% ROI is much better than the 50% ROI. So definitely you will like to go with the $100,000 investment than $200,000. So likewise in rent, of course, if you can increase $100 rent increase, you can increase the property value by $24,000 in a market, ordinary market like Ottawa or wherever. So if the property has 5 units, $500 increase, that may increase about $120,000 market value. So that is the beauty of multifamily compared to single family. Single family is just a single family. So that emotional buyers will buy, and market price is going to be the determining factor based on the situation and emotion. But multifamily is not exactly like that. I can put one example, a few examples I can show down. So you will see that how easy or what we can make the changes in the values.
You know, the only problem, as you improve the property and raise the rent, then everybody else wants to get a raise to cover the extra costs.
Raise of what?
Well, I mean, say you buy a property, okay, you update it, you add some stuff to raise the rent. Then after the tenant goes to his boss and says, my rent goes up, I need a raise. So it has a multiple effect. And that's
True.
also too.
Yeah, but raising the rate or their salary is not in our hand. Of course, they have to talk to their boss or they have to start a business. It's so unfortunate. But at the same time, as an investor, when you step into that only, you will understand how much a cost you have to face and how you have to manage a property. It is not that easy.
Yeah.
So for all your efforts, only that reward is coming.
Mhm.
So if they are not putting that effort or knowledge, they cannot. One property, I can show that in the example, I bought it for 598, and by the time I did the closing itself, the appraisal value came about 1.125.
Yeah.
So they 50 years they owned that property. They sold it for $600,000. Within
Yeah.
2 months, my value is 1.125, means $600,000 profit to $500,000 profit.
So,
Is it unfair?
what did you do? What did you do to the property?
So thank God in that property, I didn't do much because that the realtor is a foolish realtor. She didn't properly calculate the value of the property and price it. Second, of
Oh.
course, she didn't know how to negotiate. So I had the negotiation power. So I was able to negotiate and find out the mistake. So I was able to talk to the seller and bought the property. So the value is that.
Okay.
So for that, we had to have the knowledge because that property was there in the market for a long time.
Hmm.
So if everybody could understand that potential, they would have bought it. But they couldn't understand that because they didn't have the education or knowledge. Even the realtor didn't have the knowledge, then put that price as that low.
Yeah.
If by chance that buyer, the seller knows that fact, it was sold $500,000 less, he may even murder the realtor, right? 50 years they owned that property, still they couldn't make that much of profit.
Okay. Yeah.
So that's the thing. So sometimes, yes, third issue is buying multifamily property don't need a lot of money, as I told, because most of the time I bought all those 10 properties with zero down. So sometimes I got 105% loan to value on one property. The other property in Ottawa, I can show that by the time I close, I had about $46,000 in my hand.
Oh, okay.
So I put initially 25,000 down payment, then I got 46,000, means $21,000 additionally in my hand. So I use that for some other purposes. And of course, they increase the market value. And right up within 1 year's time, the market value is about 2.5 million from 1.3 million. So I used little money of that and some other money and did that one. So that all knowledge works, and knowledge plus money is really amazing. If knowledge alone, you have to be more creative. That's the only thing.
Oh, okay.
So how it's happened, I used OPM, other people money, I used other strategies, VTB and things like that. So I know how to use debt capital and equity capital. If you know the process, you can do it.
What's VTP again? Okay, other people's
Yeah,
money.
VTB, we call that vendor take back. Vendor take
Oh,
back
when you
means,
take back. Okay.
yes. So as I told here, how we are going to win the properties and do that, we have to have the proper proprietary process and continuous education and continuous support, things like that. So what do you mean by proprietary process in real estate investment? It is a specific predefined way of doing the required steps in order to get a specific results. What is the specific results? Get a proper profit in 3 to 5 years time in real estate investment. So how you can do that? You have to find the right properties. You have to submit a proper offer negotiation. Third one, underwriting the deal. Fourth one is inspection, due diligence. Fifth one. Sixth one, funding and financing and finding the proper down payment. That means we call that as raising capital. Seventh one is mortgage arrangement. Eighth one, operating that as a business. Ninth one, increasing the market value. 10th one is exiting. Exiting means either you can sell or even do a refinance. So this is what we teach and this is what we do. And this is the proprietary process. If you exactly know how to do that, then that is a science. You will find only the right property. You will find only the right properties. Then of course, the rest will come in the right place. So our proper checklist and the way we are negotiating and buying properties should really give you a guaranteed results, even whatever the market. Of course, fluctuations will be there for sure. But if you can treat the fluctuation as short-term and keep the real estate as a long-term investment opportunity, you can definitely go in the right direction. I cannot tell that in every part of the world, because here I'm so much confident and telling because the number of population, right? People are coming more and more. So the demand is definitely high. So we have a bigger demand for housing. So in this market, our strategy will easily work and definitely it should work. But if it's a place where immigration is more, immigration is less, then the number of people are going to come down. Then gradually you may not simply do that in any market. That means upcoming market or down declining market. But here, of course, it's definitely possible if you follow the process. So these are the properties, as I told, I already showed that. So hopefully you may be getting some value so far. If you don't, please put your note so that I can see how I can improve the value. And of course, I hope you may be getting some confidence. Many people don't have the confidence to commit something. It can be marriage, it can be anything. Their confidence is the place of what they are lacking, and that's the reason they are not doing. You may have seen many business owners, entrepreneurs, they are not educated as you guys. What they have is a commitment and confidence. The confidence is mostly coming from their competence and the skill, but many business owners, they get their confidence, their personality. Then they know that, yes, I can get the help and I can do that one in the right way. They are okay to ask for many people and get the right information by paying or learning or whatever. They do that. But by the time they commit, they don't probably know anything. They don't know even how to achieve that. So if you really want to learn everything before you start, you can start only a job, not a business, not an investment. So if you are ready to figure out while you are going, only thing, of course, you have to really see whether it is a good potential. Your gut feeling and knowledge should tell you, yes, it's very good to try for this, but at the same time, I don't know how to make it happen. That's okay. Then you can commit. If you are fearful, that's okay. But if you have your gut feeling saying it is not at all a good opportunity, then don't go for it. So that is very important. Whether it's a bigger goal and whether it's a worthy goal can be answered by yourself. Whether you're a superstar knowledge person or not, doesn't matter. Your gut feeling will tell that. After that, the fear will come. That fear will come and knock off your gut feeling and everything and put you off in the hold mode. So that's what many people do. They try to take action, they still stop it. Everybody have that fear. With that, even with that fear, you should be able to move forward. Then only things will happen. Okay, I'm going to show some of the deals that I bought recently with zero down strategies, so you can have an idea. So this particular property, we bought about $845,000 with about $150,000 VTB, and at the same time, at that time, the annual rent was about $120,000. Then I was able to increase that to $140,000. So if you increase that rent by $40,000, how much would be the value appreciation? 40,000 divided by, even we put about 6.5% cap, it's about $615,000. And of course, by the time I bought the property, at that time, appraisal value came for about $1,025,000 or something. So from that, it increased even more. The other one, of course, this is another property. This is the one I talk about. 598 is the purchase price. I put about $200,000 second mortgage and bought this property. At that time, the appraisal value came for 1.125 within 2 months' time by the time I closed. But this year, January, I did that again. That time, the value came to about 1.507 because I increased the rent and everything. 1.507. So that is the beauty of commercial real estate, because if you know the knowledge, you can do a lot of things. And of course, it has still more opportunity because in this area, it's a vacant area now. I can put about 4 different single bachelor's room. If I put that, my income is going to be even more. But I'm a little busy, but at the same time, if I can get some investors and put that, it'll simply go to the value more than $2 million. So that's the beauty of that. And do you think single family, you can do that? Me, very unlikely. So this is another property I told about. I bought it for $1.3 million with VTB 200,000 at the rate of 4% or something. And I spent about 50,000 plus renovation. And I was able to bring the value about 2.5 or 6 million at the time. But now the value based on the demand will be lower a little. But I increased the income to about 180,000 or something. So the market value is this. So within 1 year, it happened. And at that time, I took this deal and put it to my investors. I told, yes, I'm looking for about $300,000 for 40% equity. And they took about 2 months, about 6 people in together. And they want to jump into this deal because by the time I did the appraisal, it came about 1.507, I think, 1.557. Yeah, $1 million. So they know that exactly they have about $250,000 profit into this deal by the time they jump into. 40% of 250,000 is already about $100,000. They are supposed to bring $300,000. Already they gained $100,000, but still they were so fearful and they really want some security, things like that, lien, things like that. So at last I couldn't continue more. So I said, it's okay. You bring $200,000. I'll give you 15 plus 2%, 17% interest on the property as a third mortgage. They said, okay. I gave that sign up everything. I bought the property. And within 3 months time, they came back and asked, shall we bring another $100,000? Can you make us as an equity partners with 40% profit? Who will do that? Because people go with the risk, right? At that time, only the reward comes. So when I was really fearful and take action, they couldn't come as an equity partner. If they had come as an equity partner, I would have bought this property and put the deal into a Royal Bank or TD Bank or wherever. But I put that as a private mortgage because I wanted to make use of that VTB and I want to make use of somebody else's money. So about $400,000 debt capital is there. So I cannot take that to the bank right away. So I put a little high interest rate and put it in the private, but still it is good rate, 8.5 interest only. I'm okay with that. So they came, but I said, no, I told next deal, if you are interested, come. Next deal I presented, they didn't come again. So the fear will never go away if they don't have any knowledge. So 1 year's time, the value is about 2.5 million, means about $480,000 is supposed to be their profit share in 1 year's time if we have sold that property. We didn't sell yet. I don't want to sell. But at that time, if I exit, I could have made about 1.2 million profit. And out of that, 40% is about $480,000 profit should have gone to them. But they did not really have the guts and knowledge and believe or trust on their accountant or whoever, and they take their decision by themselves. How much they lost? About $450,000 they lost in their opportunity. So that is the beauty of equity partnership and things like that. So when you package a deal, it should be win-win. Then everybody will come and join so that you'll be able to make better profit. So that's what we teach and that's what we do. So the next one. Yeah, this is another property I bought. Of course, I told that I'm going to buy the second property in Ottawa. If you are interested, come and join here. Again, they came and gave me about $100,000 third mortgage for about 14 plus 3% interest, but they didn't come as an equity partner. The next property is listed for about $1.8 million now. That has only 2 rental income. But this particular property already have 4 different rental income, the commercial unit, and there are 2 residential unit up, so 3, and behind there's a separate 1-bedroom commercial residential unit. So 4 rental income is there. The basement is a big basement, but separate entrance, everything is there. We have to spend some money and do the renovation. If I spend about $40,000, I can get another $2,000. So it's going to be 5 rental income opportunity. So still they came third mortgage $100,000. They were not ready to come as an equity partner. So how much they lost, they exactly know that. So that is the beauty of finding right property and pitching it to the right people by learning how to do it. This is another property, is about 4.5 acre land, 3 commercial units. I took about VTB $100,000 and potential rent increase about 100% because 30 years plus this was tenanted by the same tenants. So now it is year over year, so I can increase the rent. So this became, the middle one became vacant, so I can increase and put the rent. And the other one is Coca-Cola or the Pepsi-Cola's storage for the Lay's potato chips. So they are a very good tenant. So I can put that as a triple net. So like that, it has potential development opportunities or even storage, self-storage or whatever. 4.5 acre land. So this is another property. We bought it not recently, but two years back. It's an empty land. And of course, it came in just a plot of land with 7 apartment building approval. But I made that as a townhouse approval with garage, underground parking, and all the elevation, everything. I made that changes. So it looks like a gorgeous property going to be. But it was not the case it is before. So I got about 200,000 VTB and got this property. But we are not planning to build it because building is not my interest. So plan to sell that. Okay, so these all happen with debts, right? I raised debts and it is risky. It is time sensitive. Payment is, if you miss the payment, you have to pay the NSFE, things like that, lots of things. But the reward is more. So if you are serious, you can just go into that. But I don't recommend everybody to go for high interest or high debts or whatever, because the ultimate game is equity capital. If you can raise equity capital, you are going to share the profit with other people. Not only you are sharing the profit, you are sharing the risk also, cash flow issues and everything. So if you find a good property, and if you can give the profit share to many people, next time if you can get a good property, they are going to come with you. So that is a real estate beauty. We have to have the knowledge. So I'm in this for the last 15 plus years. So I spend enough money and time on learning whatever. So that's the reason I'm able to make some better changes in this. So the net profit, as I told, belongs to me if it is purely my one, no equity partners. It is okay, it is worth it, but it is not what I want really, because I want more people together so that we can grow even bigger. So the reason it was possible, of course, I'm good in VTB and finding good properties and adding values and things like that. So that's how it happened. Okay, guys, I hope you may have been convinced that you must buy a multifamily property or commercial property, and you can buy that, and you would like to learn multifamily or further VTB. And of course, this is a basic VTB training, but at the same time, in my paid coaching classes, we try to put advanced VTB training and many other things. So that'll help you to really negotiate and buy the best properties. I hope you will be having some idea now. And if you want to learn more about multifamily or the VTB strategies, you can tell me, and why you need VTB learning, because you have to have a passion towards real estate investment. That is the number one thing. If you are not passionate on real estate, this VTB is only a strategy. So that strategy helps you to buy real estate if you are passionate. And if you can buy right properties, if you can find the good properties, then if the down payment is stopping you, then you will think that as a strategy. Of course, many people have the problem. So VTB is a good strategy to learn, no doubt about it. If you learn that very well, you can definitely make use of that, and you don't need to wait for years to save the money. Okay, in my advanced VTB strategies, of course, we try to do why you should go for VTB and how to structure a deal with the VTB, how to get VTB in a good deals, because bad deals will attract VTBs, how to go and get a good deal with VTB, and how to make sure the deal makes sense. That's very important, right? Because you have to see the deal, and again, lender's going to see the deal. So you have to have the both side perspective so that you will not get trapped with the deal with VTB. Because if you waive the condition after that, you must buy the property or you lose the down payment. You have to be really sure what you're doing. And how to motivate the agents and sellers, and what happens if you don't get that VTB, or what should you do if you don't get the VTB. So those are the things we cover in the advanced VTB's trainings. And of course, I already shared my story, so I don't need to continue more. Of course, I came to this country in 2004 and bought the first property in 2005 within 6 months, second property in 8, third property of in 2009, I lost my job. And of course, at that time I was doing 3 different jobs: newspaper delivery from 2 a.m., accountant by 7 a.m. to 3, and 3:30 to 7:38 I was doing actually courier delivery. And by the time I come back, I had a small clothing store my wife used to take care. I come there, stay there, close the shop, go home and get back, and in the morning again it's the same routine. Saturday, Sundays, of course, with that clothing store, I was doing bookkeeping. 5 different things I was doing in one. So up to 2008 or 9. Then I lost the job. Then of course it came 4, and gradually I reduced that courier delivery, and then I reduced the newspaper delivery. Then I became as a mortgage broker. So that's how I did that. Because since I lost the property in 2009, right after I lose the job, just because the tenant did not pay me the rent, I thought, yes, the reason I lost the job is I didn't have enough knowledge about real estate. If I had the knowledge, I will not just lose that way. So I decided to become as a mortgage broker, a mortgage agent. Then I became as a mortgage agent. Then I bought many properties. Then of course, 2017, 18, we started Canada Investors Club. And at the same time, I decided to go into multifamily because that has more benefit than single family. That's how I moved into multifamily. So that helped me. This is the property I lost in PH6. Still the tenant is living there. He didn't pay me the rent, but after that, after I lost that property, he bought the property from the Bank of Montreal. So still he is living, I think. Okay, you can imagine the situation, when we lose everything, it's really difficult to get back, but it doesn't matter because when you become as a business owner, you have to really think again, you should come back. So 2009 and 10, of course, I had another girl. Then 2011, my wife passed away with cancer. Then again, I had to start. And then I bought about 14, 15 properties. This is how I come up with this one. So everybody has stories, so it is not that big, my story is big for me. Everybody has their own bigger stories, but that stories should inspire somebody so that they can take some action. That's the reason I told you. So along with mortgage, of course, I learned wholesale, lease options, and multifamily commercials, and some construction. In lease option, in one single deal, I was able to make about $140,000. I learned that by paying about $5,000. And within about 2 months' time, one client came to me as a mortgage client, but I couldn't do a proper mortgage, but I did a sale and buyback lease option. And after that, I made about $140,000. In wholesales also, I made some money, but I was not so passionate in wholesale, so I moved into multifamily. Okay, guys. So moreover, while I learned the strategies, how to do zero down. The reason I had to learn zero down is, of course, I didn't have money. I lost the property, so I had to start somewhere. So I decided to do that. After I learned, of course, after I started earning, I spent enough money for more than $250,000 in learning and real estate and other things. So that knowledge only helped me to go further into coaching or even buying more properties. So some people don't practice what they learn. They keep on learning. It's not worth it. So you better start something ASAP with the knowledge or whatever the people surrounding so that you can be able to share it. So guys, if you have any question you can raise, and one example of one mistake I made is about $115,000 mistake, because I bought a it's a commercial plaza, $6.3 million, 7+ years back, more than that maybe. I bought it, I arranged the mortgage, everything. Myself and my partner has to bring $500,000 out of the $115,000 deposit I made it. Other 3 partners supposed to bring about $1.5 million, $500,000 each, but they didn't bring the money on the closing date. So seller did not give me any extension, so I lost the down payment. More than the down payment, the opportunity cost is the biggest thing, because if I had that property now, that it should be more than plus 15 plus or 12 plus, at least for $12 million. It's an amazing location. So we have to think more about the opportunity cost than the direct cost. So if you delay learning, how much you are learning? If you do wrong things, how much you are losing the opportunity cost? Yeah, so that's how I became. So this is just my story, guys. So these are the single family properties I bought in the last 14 years before I started multifamily. And of course, I don't want to continue. If you have any questions, let me know so we can discuss. Then we can go further.
Anyways, thank you for the lecture. There's a lot for I to digest, but
Okay.
but I definitely am interested in multifamily property.
Yeah, it's a golden opportunity because I bought 13 properties in one single year. At last, I knock off 3 properties because market started changing. So I thought it is not sensible to buy those 2. One property, I got about $2 million property. I was able to arrange $500,000 VTB, so I don't have to put any down payment. Even then, I quit that property and came out of that, but I gave up my $25,000 deposit because sometimes strategically we have to get out of it. So that is very important.
Yeah. So I guess, but from what you're saying, I mean, you're going to get some. You might get situation where I mean, you depend on people and then they don't live up to what you expect from them sometimes. So you have to expect some losses.
It's true, because in my opinion, many people say don't lose your money and don't forget the rule number 1, things like that. I respect Warren Buffett. He is a superstar. But at the same time, do you think he never lose any money?
He has to. It's not possible.
He's lose.
Any business you're going to lose money sooner or later.
Overall, he is correct. Maybe in the total basket of stocks, he didn't lose it. But if he take one stock, he lost it. Other stock, he lost. Total, he didn't lose it. The reason he never quit.
Yeah, because overall, in the long term, you recover overall. You're not going to recover if you quit, basically.
First property I lost. If I stopped with that, of course I lost. I
Yeah.
quit and I'm a failure. I didn't
Yeah.
stop. After that only I bought 14 properties.
Yeah. it
And
didn't
again,
discourage
during
you.
that process, go ahead.
I said it didn't discourage you. So
Yeah,
you have to really be determined. Yeah.
Yes, that's of course at that age it was okay, 35, 36, maybe 40 plus. But
Yeah.
now it may be a little tough, but doesn't matter,
Yeah.
loss is part of the game. I always say either you have to spend 10% in learning or losses when
Yeah.
you plan a bigger thing. If I want $1 million in real estate or whatever business, at least I should be ready to pay $100,000 somewhere to learn or otherwise make mistake. If
Yeah,
you are
that's
fearful
true.
on that,
Yeah,
you cannot do it.
that's true.
So
All
you
right.
don't need to lose, but that's a maximum, I would say. With 5%, 6%, 10%, it's okay. Because 900,000 net is coming means if I don't take the step, it's not going to happen at all.
Yeah, nothing's gonna happen now.
Yeah, so I should not try that.
Okay. All right. Thank you. Have a good night.
Good night. Okay, any have questions, let me know. So if you want, I'm just going to share, if you want to do anything about coach learning in multifamily, because normally I do this multifamily coaching monthly and weekly and going like that. If you are
Okay.
interested, we call that as a VTB, sorry, multifamily VIP coaching. It's 1 year coaching. So there we have a 3-day boot camp. Next
Okay.
boot camp probably August 18th, 19th, 20th. Sometime we may change the date. It's going to be online, so it is
Okay.
convenient for any people from Alberta and everywhere. And other one, of course, right after the boot camp, we will be having 15 weeks mentoring session. So the mentoring session on Wednesday, 7 p.m. So right after that boot camp, you will have enough knowledge. So you can take action and come to that Wednesday meeting with any questions or properties or whatever, so that we can go through. So you will be able to take action and move on and buy that property or whatever. So that's going to be about 4 weeks training. So that end of the 4 weeks training, you should be able to buy a property unless you change your priority and decide, no, I'm going to buy that little later. That's up to you. Other
Okay.
than that, if you decide and committed, 100% you'll be able to buy that, whether
Okay.
you have down payment or not. So that's what we are teaching. And every month we are having mastermind. Each month we are having different topics. We go in deeper so that you'll be able to learn more about this real estate. Even now we are spending money. Tomorrow I'm going to spend about $15,000 in mastermind. So it is network, first of all, whatever I don't learn. So we are spending money all the time, whether we have money or not. Once we get the passion and things like that, we are doing that. Sometimes hiding the fact from my wife, I do it because it is my passion and it is where we get the money.
Yeah,
So we had to feed it.
okay.
So boot camp, and after that I give about 5 one-on-one sessions, 1 hour sessions. You can book online or you can come to my office or whatever the way you can do it. So you'll be able to learn everything. The other one, of course, we give out 10 minutes quick calls that you can take it anytime. For example, if you find a property, you want to take a decision immediately, you can call me. If I miss, I'll call you back as soon as possible so that you will be able to take the action. You don't need to wait till the next meeting or whatever. That quick calls really helped many people. And one of the examples, that guy in Vancouver, he wanted to buy and sign the contract, but when he talked to me for the 10 minutes, that gone about 20 minutes plus, but he decided, okay, it is not the best property. He stopped buying. So if he did not have that call, he would have bought the property. So the 10 minutes quick calls really helps us. And on top of that, the last one, we are giving this 15 hours of online course. So anytime people join my course, they can start learning before even they come to the boot camp or whatever. So this is how we structured this one. So it's about 13 full days of training because 3-day boot camp and 10 mastermind, full day mastermind in the whole year, each month one. And again, so 13 days plus 5 hours of one-on-one sessions and 5 quick calls, 10 minutes. And again, this online course. So this is how we package that. The total price, total value will go any amount. I don't care about it. The price is $10,000. If you have any questions or interest, you can let me know. And this is the scan, I think. Otherwise, you can even contact me. We can even talk to you guys. I think we talk too much and we passed the time 8:20 already.
Yeah.
So I'm going to be here for the next 5 minutes. If anybody have any question, Jaideep, I noticed that you had a question or you raise your hand. You can open up, man.
Okay.
Yeah,
Thank you.
well, Thank you, sir. Thank you, Leo, sir, for again sharing your great knowledge about the VTB. Now, when it comes to the running the numbers, right? Like, how do we negotiate the VTB? Like, if because I'm trying to like look out for like properties right now, where where it says like I came across one property. It's like assumable mortgage at 2.7% for like next till 2030. And the cap rate is coming around like 4.3%, with the NOIs is like at 560,000 for 56 units.
Mhm. Yeah,
So
that is a negotiating the VTB is a bigger thing that we cover in this advanced VTB too, because that'll take a lot of time. I think last time we covered something in one of the days, because it's all how your relationship with the realtors and things like that. It's a long chapter. How can I put that? You have to give what the seller expects or something. You have to make it a win-win. That's a easy answer I can put it. So it has to be a win-win, because they are not just going to give you. You have to give something so that he will give you something. Figure out what you can give, because you may have one problem to solve, he may have another problem to solve. So if you are ready to do that, if you are not greedy enough to grab everything, you can definitely win.
thank you,
I
Leo, sir.
noticed that. Thank you. And Andrea, it's the first time I think I'm seeing you. How are you? I think you are muted.
Hi. Yeah,
Yes.
this is my first time to attend.
Okay,
Yeah,
what do you do?
because I'm so interested also in like multi-family, but
Okay.
actually I don't have a house yet. But I'm doing shared accommodation business. Shared accommodation.
Shared accommodation.
Yes.
Okay, so that's the one you had been doing so far.
Yes, I'm renting a house and
Okay.
then I'm sharing it with international students.
Okay,
Yeah.
that is good. That is good. But yeah, nothing wrong about that. Since it is international students, your cash flow would be good, things like that. But how many properties you have like that?
Right now there are 3.
3. Okay, that's good.
Yeah, but the 2 houses are from the same landlord and the other one is not.
Okay.
It's
Yeah,
like shared
so
accommodation with my family.
correct. So are you
Yeah.
happy with that business, or you want to do something bigger or better?
Something bigger because I'm
Okay.
already used to it and I know that within a house, like, okay, I pay rent. I'm free with all utilities because the students are the ones who's paying.
Okay.
And also, I also have a cash flow.
Cash flow. Yes, that's good.
Yeah.
Yeah, I was in single family, and 1 or 2 properties I did that way, room by room I rented. Then I
Yes.
decided multifamily is the best place if we really want to go bigger, because
Yeah.
when we decide to go bigger, opportunities are more, and at the same time risk is less. And of course, we really feel something that we are achieving.
Yeah.
So not
Because
everybody.
I think the multifamily is better for that because for me, I don't run out of tenants.
True.
Because those who live with me before are the one who's giving me tenants too.
Mhm.
And if it's multifamily, then there will be more bedrooms to share.
Correct, 100%.
Yeah.
And of course, as I told one of my friends, they didn't see the property for the last 1 single year, not even visited once, but still the business is going on. So that is the way we are setting up a business. So you can do anything right after you buy a property, and cash flow is coming, price appreciation is there. So that is a real business. Otherwise, we are spending too much of time with this. So
Yeah.
I can't blame anybody, because not money making is the only goal for everybody. So many people have different things in their
Yeah.
target or achievement.
Because actually the owner of the 2 houses that I have is they also have a lot of properties. and they are
Mhm.
also like renting it out, but they were okay to share it with the students for those who
Correct.
are renting to them, because of course if you are renting to those who are renting to students,
Mhm.
they will be like cleaning up the property, they have to make it nice,
Yeah, that's-
so it's an increase for them, increase for the like it will appraise, the appreciation will be increased.
yeah, definitely true.
Yeah.
But the beauty of multifamily or the commercial is even in this market, we can increase the value.
Yes.
So for a single family, of course, now value totally come down. So
Yeah.
it is emotional buy and prices fix the emotional situation. But when you go into this, yeah, it is with your knowledge and creativity, you can increase any amount. So in 1 year's time, $1 million increase, and 1 year's time about $900,000 increase is not possible in single family. So
Yes.
that's
Yes.
why I like it. So if you are interested, yeah, just talk to us and we can see where we can fit into this.
Yeah, okay, thank you.
Okay, thank you. And there was another person recently come. What is that? Chi Geos. What is that name? Can you introduce yourself if you are interested? And with that, we can close for the day.
Yeah, hello. Sorry.
Yes,
Yeah, I came in late.
yes, I noticed that. So what do you do really? Are you an investor already?
Yeah, I work as a PSW.
PSW, okay.
Yes.
So how serious are you into multifamily? You want to get into this or it is just the first time?
Yes, because I have like a little bit of funds from my home country.
Mhm.
I finished my studies 2 years ago.
Okay,
So I've been looking for, opportunity of what to do with investments.
okay.
Yes.
Yeah, do you have any real estate experience or it's the first time you look into
No, yeah, it's in my home country that I have really not here.
Okay.
It's different here. But I've been reading a lot of books on real estate, and I watch a lot of videos. That's how I came across to you.
Okay, okay.
I've been
You're
on,
from
yeah, I've
Toronto?
been on your what?
You're from Toronto?
No, okay. Is it where I'm originally from, or where I live now?
Yeah.
Okay. No, I live in Waterloo.
Waterloo. Okay, very good.
Yeah. Mm.
Yeah,
So
definitely.
I've always known that multifamily it makes sense, in this part of the world, and that is why I really want to learn the ropes from you.
True.
I know that single family does not, it has its pros and cons, but just like you said, if you want to really if you want to have a increment in terms of equity or worth, you don't do single
True.
family does not do that, so.
Yeah.
And
I
when I
cannot.
saw, yeah, sorry, I came a little bit late because I wasn't from the beginning, so I really want to know more about the VTB zero. How does it work? I really want to come under the mentorship, your mentorship, and know how it
Mhm.
works and how I can take it from here.
Okay, so if you are serious, I can wait and I can even talk to you in person. Otherwise, my manager talk to you. Yes, and okay, we have your information. I will get back to you on this one. Hold on, thank you. And anybody
Okay.
else have any questions or anything to share? Harsh, I think we didn't talk to you before. How about you? Are you available?
Hello.
Yes, Harsh, how are you?
Hi. Good. How are you?
Very good, man.
Good.
So are you
Yeah,
from Toronto?
no, I'm from Vancouver.
Okay.
Yeah, I got referred by Jaideep.
All right. Okay. You are
Yeah.
the one from Jaideep. Okay.
Yes. And yeah, I just moved here last year to Canada,
Okay.
and yeah, I'm really new into real estate. Like if it's single family or multifamily, whatever,
Mm-hmm.
I'm just clean slate. Yeah.
Okay. That's great.
Um,
Uh, almost done. So, 1 year in Canada is more than enough for you to start in real estate if you are very serious. I started within
yeah.
6 months. I landed in this country.
hmm
Unfortunately, I didn't have any money. So, what are you doing? Are you full time working or what you do?
Yeah, I'm working full time right now. but it's a rat race, so I'm trying to getting out of it as soon as I can.
Right. What's your
And
background?
so I work for Sony,
All
which
right.
yeah, so I'm a technical director and working in like VFX animation movies.
Okay. That's
Yeah.
good. Okay. Yeah, rat race will never stop, even if you are a doctor or engineer or whatever,
Yes,
even for
exactly.
lawyers, unfortunately.
Yeah.
And that's the truth. I had one client. He was making $250,000. Wife was making about 40,000 or $50,000. 6 months back, second time they came to me asking if they can buy a house, just a house to live, but they don't have down payment.
Mm,
They increase their status and expenditures. They don't have any down payment. They don't have any savings. Can't even believe it. $300,000 household income. They don't
true.
have down payment.
Yeah,
So they
very
were
true.
asking me rent to own, things like that. I said, okay, but that is too much. So that's the thing. Rat race will never get off
Mm,
unless you decide that purposely. So yeah,
definitely.
if you're hopefully if you are working for Sony, you may have enough time and you are in British Columbia, for sure it's good place. And
Hmm.
yeah, if you are serious, you can talk about it and you can call my number or Jayadeep has a number.
Sure.
You can book a call today, tomorrow, anytime.
Okay, cool. Thank you so much.
Okay, Harsh, thank you. Take care.
Excuse me. So
Yes.
yeah, please. So how do I contact you? How do I contact your
I am
team?
just checking with your detail. Give me 1 second. Your email. Okay, you take down my number 647 709 1536.
Sorry, 153 what?
647 709 1536.
1536. Okay.
Yeah, I can call you.
641 7091 536.
647
647. Oh, sorry. Yeah.
709
Oh, 647 709. Yeah.
1536.
Okay. Yeah. Just the
Right.
7. Okay.
Yeah. So
Okay.
call me anytime, even today or whatever. We can have a
Okay.
chat and see what.
Yeah, because I need to understand how it works with zero down
Yeah.
payment. That's what I was trying to.
Yeah. Zero down. How long are you in this country?
2 years.
2 years is more than enough. But in my opinion, if you are really expecting zero down, sometimes you have to work a little more harder. I'm open because I'm not just taking any students just for the money alone. They have to understand the process before they start. I don't want anybody to.
I understand.
Yes. So it worked for me. Many people do that, and that is how many people buy properties, especially multifamily. So as long as you are committed, you can 100% do it for sure.
No
Yeah.
problem. No
Okay.
problem.
Give me a call anytime. Thank you.
Thank you.
Yes. Jaydeep, I think you raise your hand again.
No, I just
Okay.
was introducing Harsh. He did
Okay.
happen to. Yep.
Oh yeah. So yeah, Harsh, you can call me anytime. This is the number. If you are interested, we can do something. And probably I will be having some boot camps in Vancouver also, but we don't know when. September or August, I have no idea yet. One of the business partners willing to
Cool.
arrange something over there. So we may be
Mhm.
ending up somewhere.
Okay. Thank you.
Okay, guys. So we meet again soon.
Yeah.
Yep.
Thank you, sir.
Take care. Thank you. Bye.